Hello, YouTube. The stock market has had an incredible run in November, adding trillions of dollars in market cap, and now we've stopped going up. So is it time to start going down? Stay tuned. And in today's video, we're going to go through exactly that. Epic stock rally fades amid signs of overheating. Markets wrap. What's the number? It's right here. U.S. stocks saw small moves after a $2.7 trillion rally in November that was fueled by the Federal Reserve, ending hikes, and the dollar erased its 2023 decline. I want you to pay attention to this chart because we've been reviewing this. It's been a very good template. And I know it's been a little bit behind schedule, but please pay attention here because I want to show you something very simple. After we stop going up, where's my trend line here? Here we go. There's a trend line. Let's do this nice and fast because I know your time is valuable. What happens here? Well, let's actually go to the low. And what we note is that after we stop going up, what do we do? Well, we start going down. What I'm looking at is this pattern right here specifically. So we note that we have our epic rally. And then once we get that sign, we're stopping to go up. What happens? Well, we get a little bit of a cut. And then previous resistance does turn into support. So let's look at the chart for the S&P and see if we can actually understand exactly what it's telling us. Let's remove this line. Oh my God, there's the epic rally. There's where we're stopping to go up. Is it time to start going down? Let's look at it one more time here. There's our uptrend. We can look at it here on the left-hand side. And what happens? Well, let's just remove a few things. We know we have our massive uptrend. Then we lose it. And then we get a little bit of a baby cut. And then we're supposed to dead cat bounce and go to higher highs into the next month. So if we're tracking this, it either means that we're either in this period where we're starting to go sideways, but look, like it tells us that when we stop going up, we start going down. That seems like really, really simple. I'd like to tell you a simple story today. So if you can stay tuned till the end, I'll make sure I leave you with some nuggets of gold. Let's go through. So $2.7 trillion. I think these bears are a little bit pissed off. And with bonuses getting paid by the end of the year, I think we're likely going to be going sideways. That's my best guess right now. We can note we're actually ticking down in fear and greed. We were at 67 at the open, currently at 65. So the chart is cooling off and the indicators are cooling off too. We're actually falling a little bit behind. It's not terrible yet, but here's where it gets a little bit more tricky. If we look at high time frame alerts, again, this is from our system, the algo.com. We have a 40% discount, but I'm going to show you all of the alerts this week because we still have our sale on. You can watch till the end if you want to learn more about our system. On November 3rd, we got S&P and NASDAQ telling us that we're going to rally for at least 2 months. But now, most recently, we're getting these warning signs here. We got a warning sign on QQQ. It gave us an 11%. Sorry, let's go here to, now let's just look at SH and PSQ. Why? Because these are inverse signals. And what I want to look at here are actually going to be all of the alerts that we've gotten. So let's now go back. We can look at the swing alerts. The market has tried to go down on a daily time frame. Exactly the chart we're looking at here a couple of times. Our swing algo just means it's good for up to 2 months. It means we're tracking the daily chart. So we've had a number of these so far, but notably, since last Friday on the 24th, I believe that was the last Friday. Yeah, on the 24th, we got SH and PSQ. The SH alert failed, but it's now right back to the alert price required. PSQ held its alert by 1 cent, tried to alert again today. So what this means is that our system, which has been very reliable, is telling us that we're due for a short-term dip. I'm not saying we're due for a crash. I'm saying we're due for a dip. So the dip, where would that land? That's the part I'm less sure about. If you look back here to our seasonality chart, it's supposed to be back to our August high, but we're not above our August high. Our July high is all the way up here. So this is the part that I'm a little bit less sure about. I'm not sure if it's going to be this relative high, if it's going to be our gap zone. So what I'm really just paying attention to is the fact that we could be going back down. And that's exactly what this tells us here. These alerts are likely going to fire tomorrow. If you hop onto the pre-market stream with me, I will tell you if they alert. I will tell you the prices. So as of right now, we've looked through the seasonality chart. We know that it's no longer pointing up. I'm going to ask you for a huge favor, please, and thank you. If you could consider smashing that thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. Thank you for your support ahead of time. You guys have been such a good audience. I truly appreciate it. So we normally focus on high time frame charts, and we have to pay attention to the high time frame charts because this one closes out on Friday. But more importantly, we're going to be closing out. Let's go to the third board. We're going to be closing out the monthly chart for the S&P and for the NASDAQ and all stocks on Thursday. So Thursday is very important. And we also have some big catalysts here. So we've talked about how I'm looking for a close over the previous candle high. Right now, we're currently over. Barring a major fat fade, like this times 3 or 4, I don't think we're going to lose 438. The question for me is whether or not we're ready for more right now. Looking at this pattern, November has most of the gains. And then into December, we have a little bit of an additional move, but it's not as clear. There's a wick on the bottom, there's a wick on the top. So let's just be very mindful that all these charts look good as long as we're over 452. The second we fall below it, we could fall right back down to 439 in a hurry. So let's be mindful of that. 439 is not really that big of a cut either. It would roughly correspond with this kind of drop right here. So that's really important for us. Let's now look over to QQQ because we've talked about how chips lead tech and tech lead SPY. Well, we closed the day red, but I believe it's a hollow candle. Yes, it is. Here's the part that I don't like. We got 3 full candles in a row. What's a full candle mean? It means we closed lower than we opened. A hollow candle means we closed higher than we opened. So if we go back here to QQQ, we've had 3 days in a row. Today's still a red day. We see a large upper wick, which means sellers stepped in. And the last time we've had like 3 red days in a row near a top was over here. We had, where do we got 3 in a row? After a correction already started, we have 3 near the bottom here. So the warning is just that it means we're failing to advance or make fresh momentum to the upside. Same thing we're seeing in the fear and greed, where it's starting to stall out. So if chips lead tech and tech lead SPY, are any of these large cap names actually giving us more of a warning here? I think they are. So we went through this before, and I'm going to make this really fast to make sure that we leave time for a little bit at the end. Every single chart is going to look very similar to this. So we'll focus on Apple, but just look for one pattern. It's the last week's candle or a failed breakout. So what do we have? We closed below the previous candle high, and now so far it looks like a shoulder, a head, and a shoulder. So unless we get back above 190.96, today we made it to 190.67, close but no cigar. This is potentially going to be a warning. Why? Failed breakout, and now we got a lower high and a lower low, right? It happened. We can use the inverse chart to see the bullish move, but we're just going to move forward to make it simple. Microsoft is the strongest stock right now. Another hollow candle keeps advancing. We're going to ignore that one because it doesn't fit the pattern we're looking for. Here's the other one. Here's Google. So failed breakout. It managed to poke over, but now it's back below. Okay, 2 failed breakouts in one pass. As of right now, Amazon is 1 cent below last week's high. 147.74. We're at 147.73. Technically, a failed breakout. Last week, also a failed breakout. Amazon does look strong on the back of Cyber Monday numbers. What do we have here? This is NVIDIA. Whoa, bearish engulfing weekly candle, and then we close below the low, and now we got a lower high and a lower low. But it's trying to rally. That's why the candle's hollow. Moving on to Meta, same thing. Failed breakout. Looks like a head and shoulders is forming here. We also have a lower low on the weekly. Bearish. Looking here to Tesla. Still have an inside bar, but not by much, by about $1. So these charts are starting to look weak. Does not mean we have to go down. A little bit down, back to sideways, then we can go back up. That might be what happens here. So as a reminder, SH and PSQ are giving us daily signals. A lot of them have failed too. The market wants to go up. So what does that mean? It means that we want to defer to the higher timeframes, which means S&P and QQQ are still up by about 5 and 6.5% from the time we got the alert, but we're getting a short-term corrective wave. What data could drive the price action this week? I think it really kicks off on Wednesday. We're going to get, I don't think that's a preliminary print. We already saw this number, so I'm a little bit confused on that one. This one might move the market. I don't think it will. I think that it's these numbers here. The end of the month or the last calendar day is going to be Thursday. CPI out of Europe, core PCE. If these numbers are already known, people are buying in anticipation of them coming in lower. If they come in with a red number or a surprise higher, that could be the catalyst. It could also be China, or they're going further into contraction. I'm not sure. But then we got the big man talking on Friday. We got Jerome Powell talking at 11 a.m. with a fireside chat. We've talked about exactly what that means. And if we look here to the last 1 week, let's look at the last 1 week, because this is where I would argue that it looks a lot less bullish than it does in the last month. And that is where that epic rally is now starting to fizzle, right? Sideways is what it's doing. So in the last 1 month, clearly have a lot of momentum. In the last 1 week, I would argue we're seeing some of our leaders start to go sideways to down. NVIDIA, Apple, Meta. It's not looking bad. It's just not really ready for a fresh push up. So what does that mean? We want to make sure we manage the risk. And that's exactly what we went through on today's pre-market stream. So I encourage you to go watch that. You can watch the weekend deep dive where I laid out my case. Or if you want the cheat codes and you want to crush the market with me, Justin, we have a 40% sale on our Black Friday right now. You can see a demo of the video over here on the right-hand side. If not, I look forward to seeing you either for our pre-market stream tomorrow or tomorrow for the end of day. Thank you for tuning in. I wish you all the best of luck. Thank you.